Once we have an impulse, why is what happens after that important to us? Because, guys, we are looking for a counter trend move to have a continuation pattern. So we continue with the trend. Okay. Now, what we look for is the bunker bomb, which is a continuation pattern, and we've refined it. Okay. We've just refined our entry on a continuation pattern. Okay, so that's what we're looking for. We're looking for a counter trend move. And what also can happen is after we've had an impulse, we have momentum slow down. Okay, and we recognize that by looking for how we are breaking the lows and highs. Okay, is it becoming ascending or descending at that point? Because if you look at the chart here, our setup is a counter trend move, okay, that continues down. Okay, so we know that we had the continuation pattern here. Okay, we've had our refinement, which is the bunker bomb, which continues down. That will continue with the momentum. Okay, but what signs do we have that we look at in the market that will tell us whether this momentum is slowing down? And that's if we get a descending nature. Okay, because if we get a descending nature at the end of momentum, we know that the market is likely to go up than to continue downwards. And these are key components that we have to look at in the market for refinement, okay? Because if we get a descending nature at the end of a big impulse, then we don't want to get involved in that market because we know that it's more likely to go up than it is down, okay? So all I'm going to do now is go through the charts and show you what I'm looking at, okay? So as you can see here now, guys, we had this counter trend move. Okay, so what we're looking to get is to get a nice counter trend move to continue downwards. Okay. Okay, so as you can see here, guys, the market has come down as an impulse. Okay, we've had a slight pullback or a counter trend move, and then we've taken out the most recent low here and we've retraced straight away. Now, what is that showing us? Well, that's showing us that the market is becoming, the market is becoming descending, okay? And that it's more likely to go up than it is down. So how do we recognize that? Well, we recognize that by the way that we took out this most recent low and that we pulled back, okay? That's showing us that the market has lost momentum. So the momentum has come down. We expected a continuation pattern, which we didn't get. Instead, we got a break of the low, which we expect a continuation to come all the way down. Okay, so when we break the low, we expect the momentum to continue. But instead of continuing, it's pulled back up and given us a candle that has showed us that we want to go back up because it's come down, broke the low, and retraced. Okay, so it's showing us that we have this descending nature and that we're more likely to go up than we are down. Okay, and if we have that sort of a market, we do not want to get involved. Okay, so if we move our stops now, as this broke the low here, okay, we would have had our alerts trigger, okay, and we would have moved our highs to here because that is the most recent high once this broke, okay. Then it's come up and broke the most recent high. So this would be the new high, okay, and this would be the new low. And we'll be looking to go up from now because obviously we had this descending nature and then we broke the trend upwards, okay. So as you can see, the market now has taken out these highs, showing us that this descending nature, when we looked at price action, it gave us a clue that we wanted to go up, and that is what has happened. Okay, and this is the key thing, guys. When you're reading price action, this is how you really get to understand the market. Okay, it keeps you out of being in a bad market because some people that are looking at this will see this impulse and they would say, oh, this is a continuation pattern to go down. Okay, but because we're looking at price action and we can read the most recent lows and highs and how they are breaking, whether they are descending, ascending, or whether they are counter trend. Okay, so we're looking at one of two things, whether we are counter trend, okay, or whether we are descending or ascending. Okay, they're the key factors we need to keep asking ourselves when we are breaking the highs and the lows. Okay. So as you can see here, guys, we are continuing. And as you can see now, we've had this clear impulse up, okay? And we would move that here, we'd move our lows here. And then what we're expecting, guys, what are we expecting now we've had this clear impulse? Well, what we're expecting is a nice counter trend move to continue upwards, okay? That is what we're looking for a continuation pattern. But also we have to be aware that if the market goes up and retraces, goes up and retraces, it's showing us that the market is losing momentum and it's more likely to go down than it is up. Right. So as you can see here, guys, this is still part of the up move, okay? Because we have taken out the most recent high of that candle, okay? So that candle high was taken out by the next candle, showing us that this is still part of the up move, okay? So we haven't had a counter trend move yet unless we have a candle that doesn't take out the next candle's high, okay? And as you can see, this candle has done that. Okay, we haven't taken out that the next candle's high, which means we are now have a counter trend move. Okay, so as we've come down here, you can see we've made this low. We've got a little high here. If we break this low, then obviously it will be a bunker bomb because we'd have the two highs and the two lows, and we'll look to continue upwards. Again, guys, I'm not going to go through trades on this video. I'm just going to show you how we look at what happens after an impulse, okay? So you can see now we took out this low here. Again, this low or this low is not confirmed until we break out the high. So if this continues down, then we'll have another low. So anyway, the only way that we recognize a low is if we take out the most recent high, okay? So this low, even though it's pushed back up, wasn't confirmed as a low because we hadn't taken out this high. Then we've come back down again, created a bunker bomb because we've got a low, a high, a low, and a retrace. Okay, so that is our setup. But again, this low, current low at the minute, does not confirm as a low until we take out this high. Okay, as you can see, another low has come. Okay, now this low is still not confirmed until we take out this high. And as you can see now, that high has been taken out. Okay, so that is confirmed as the low. Okay, once we break that high. Okay, but we want to go to the most recent low. As you can see here, that is the most recent low. Okay, and what we want to do now, guys, is look at impulses and how we want to continue with that. Because you can see here, guys, we had a clear descending nature, price went up. We had a clear counter trend move, price continued up. Okay, so these are the things we're looking for. Okay, so as you can see here, guys, as we expected from a counter trend move, that price has now continued upwards. Okay, and as you can see, this would have been the most recent high and low. Now, what are we expecting, guys? We're looking at one of two things, remember. What are they? Well, we're looking whether price is going to be counter trend, or we're looking at whether price is going to break the highs and retrace. Okay, because if it becomes ascending here, we don't want to get involved in that market because we know that majority of times, and with the experience and probabilities in the market, we know that it is likely to fall out than it is to go up. So we don't want to get involved in that sort of price action. Okay, so as you can see here, guys, price has just continued. We've continued up with the impulse. As you can see, it's a clear impulse. And we're still waiting to see whether we get this counter trend move or not. Okay, you can see here this candle slightly taken out that high, which means it's still part of that move. We are not yet counter trend. Okay, and that one is about the same. So again, that is not counter trend yet. And you can see the candle after has become counter trend because we haven't taken out that high of the next candle. Okay, so what we're looking for, we're looking to see if price can come down, give us a setup and continue upwards, because that is how a trend moves. It goes up, pulls back, up, pulls back, up, pulls back. Okay, now that is what we expect with a trend. We expect the market to go up, pull back, go up, pull back, go up. Now that is a trend. Okay, so that's what we want to see in the market. So let's continue. As you can see, market's pulled back. And then you can see we've taken out this high here. So you can see now that the new low would be here. Okay, most recent low. And you can see the market has impulsed yet again. Okay, so because we've had a counter trend move, we've had a continuation pattern and it's gone up. Okay, now I'm not going to go through charts or where we would enter this or not entered it. I'm just looking at clearly at impulses and what we look at after an impulse. So you can see again, we've had an impulse here. What are we expecting? Well, we're expecting a nice counter trend move, okay, to continue. Okay, that's what we'll be looking for because that is our setup. Okay, but obviously, again, we've got to look at price action because we want to work out whether it's going to continue or whether momentum is going to slow down. Okay. So here you can see, guys, we've had this counter trend move. So you can see we need to see a nice counter trend move for us to continue. Okay. And what you can see here, guys, is that this candle has taken out the high. Okay. So this is another key factor. Okay. This is a key thing that you need to look at when we're looking at these markets. Okay. Is that this candle now has come up and taken out this high here. Okay, you can see it clearly, it's taken it out. If I put that up there, excuse me, you can see that the candle has just taken out that high. Okay, now why is this important to us when we're looking at it? Because at the moment, the impulse has come up, we've had a pullback, but it's just taken out that high. And instead of continuing, because what we expect is the market to break and continue to go upwards. But as you can see here, this market has just clipped the top and retraced, okay? Showing us an early signs that we could be ascending, okay? And that majority of the times, we know if we become ascending that it's likely to drop than it is to go up, okay? So let's have a look at what happens next. If we get a nice retrace candle, then that will definitely show us that the market is looking to go down than it is up, because obviously we've broken this high and then we would have retraced. Okay, so you can see we've got this clearly candle that's coming downwards. And this, for me, we would obviously see that this would be ascending, okay, and that we would know that price is likely to go down than up. Okay, we also have more warning signs because we have these big wicks here, which I will not get involved, which I will not speak about in this lesson because I'll go over them in another lesson. But we have a lot of warning signs that this price action doesn't want to continue. The most important one is that the impulse has come up, pulled back, taken out the high, and then retraced. Okay, so we know that price action is likely to fall out here, so we would not be looking to get involved. As you can see, price action is just, we've got these big wicks and we've got this ascending nature. We can see that price is just now reversing down. Okay, wouldn't be surprised if we take the lows out. And as you can see, that's what's clearly happened. Okay, and that's what's a key thing about reading price action and looking at what happens after an impulse. Because we can see here, guys, that we've had a descending nature, it's gone up. We've had a counter trend move, it's gone up. We've had another counter trend move, it's gone up. We've had an ascending channel, it's gone down. Okay, and this is just one part, this is just one real move in the market. But yet we've learned to read when to get into the market and when not to get into the market by looking at how we look at what happens after an impulse.